All right, market structure. Levels and trends. So these two concepts go hand in hand as the levels help us identify where we are in the current trend. Again, another layer of context. As you can see, this is not an exact science, but more of an art. And it all boils down to drawing things in a way that helps you see what is happening the best. So H equals high, higher low, low, lower high, and lower low. So obviously you can pause this and really kind of digest what is going on here. But these are the building blocks of a trend outside of a trend line. So the structure. So just this is a quick way. Again, there's different ways of explaining structure, but this for me has been one of the easiest ones to kind of digest it and understand it, right? And then you can also see that, you know, whoever created this was their interpretation of that market structure, right? So even though it's defined, right, by new highs and higher lows and higher highs and lower highs and lows, and lower highs and lower lows for the downtrend, you can also see that you can break this down into smaller chunks. This is this here technically is a new high. That technically is a new lower high or higher low. High, higher high, higher low, higher high. This is a new low at this point, depending on how you're looking at this, right? So that's again part of looking at the longer trend versus the shorter trend, right? That you're trading. Maybe this is the shorter trend you're trading off of, and then maybe this is like, based on what I see here, maybe he used the higher time frame to draw these out, right? So in my opinion, that's smart. That's what you want. That's what you would want to do. You would say, okay, well, we can use this chart here to identify exactly where momentum is and how structure is maybe breaking down in the lower chart. But does it matter? Those things don't matter as much as what's happening on the higher time frame chart, right? So having exactly where you're identifying these things, these bits of market structure on the lower term chart, on the lower time frame chart, based on the higher time frame information, is actually important and is actually can serve you well, right? So this is where we determine that this is support for our longer term trend. Look, once it's broken, this is low. That was a reversal for the main trend, right? Other than that, everything else, you should be focusing on the upside, right? Until that happens. All right, important levels. So to the right of a chart is a future. So what I mean by this is like when you look at a price chart and you've got, the most up-to-date bar, right? To the right of that, nothing's happened yet, right? That's a future. It's anyone's guess, right? But to the left of that is the past. We have the recorded past of what's happened. So we can use what has happened in the past to help determine what might happen in the future. So I typically refer to a price where a high or low was previously made as support and resistance levels. So support being a level below current price with resistance being above it. Once a resistance level is broken in a meaningful way, it then becomes support and vice versa. What was once the ceiling is now the floor. So once a previous high or low has been made, it is very common for price to interact with that level again in the future. Context around a level and the time frame will determine its importance, right? As we're getting ready to see how they interact with things, because those price, it's not just some random pattern that happened, right? These levels aren't just random things that happen. Those were specific buyers and sellers that created those levels in the markets. And as price comes down to there, you can put yourself in their shoes, right? Once it comes back down to the level that you bought in, if you think that that's an important level, if it moves beyond that, you might sell or you might buy more. It depends on your strategy, right? But we know that there's people that are watching those specific levels, and volume is often increased during those times because people are making moves. People are getting out, people are adding, or people are selling. So support and resistance. So we see how former resistance above becomes support as it breaks through, and then vice versa as the market moves lower. So it looks very methodical, doesn't it? There's a reason for this, and we will go over it in more detail when we discuss market and volume profile in the value section. All right, but you see This was a previous resistance level, broke up, consolidated within that, broke through it, right? Broke through this level here, test, right? So we're constantly seeing this pattern repeat itself, right? And also look as part of the previous trend here. This is the previous uptrend or the current uptrend, and the way that price was created these support levels. And then as price comes back down, where's the first level we should be looking for? They're going to interact with these lows. This allows us to target things, right? When I talk about not being able to perfectly predict the future, but have a good idea of what might happen, these are very real profit targets to the downside, or support levels to buy from if you're adding on to your trade. All right, now another layer of context. So now that we are armed with this additional information, it's another tool in our toolbox that we can use to limit risk and help strategically place our trades. We can use them to buy, sell, and one of my favorite ways to take profits. We can also use them to gauge buying and selling pressure. If a stock is tearing through these levels, up or down, what does that tell you about the intensity of the buyers or sellers in charge? Also, where we are in the cycle matters, right? Another very important aspect is using previous levels of market structure as a stock interacts with them again weeks, months, or even years later. As with everything else, the larger the time frame the level is created on, the larger the reaction and importance surrounding that event is. All right, so this is a powerful example. All right, so this was 2021, beginning of 2021, and this is Bitcoin, right? So this was part of the previous rally here when we were on our way to $65,000, right? So it came up, and I specifically remember this is actually whenever I talked my buddy into buying into the cryptocurrencies. I bought in previously, and I sold him on the idea of it, and that it was kind of the future, and that it was an important part of your portfolio, and so he got it right around this, and he was frustrated by this, and he ended up selling out at an inopportune time because he didn't understand, right? But I had seen it before where, okay, this was kind of where we had a pullback here. It came back down and tested this level again. And this was up in the 45,000. So this was I think it was like a 20 or 30% pullback, which was common. So for me, those were good buy areas. And so we tested it again. And so I think it was after this one, I was like, listen, it's showing support, the 30,000 level. You need to just stick with it. If anything, buy some more. And he ended up selling out. And then he had to rebuy back later, right? So, but we can see the wedge pattern here that happened here as well, right? As things consolidated and moved into a tighter consolidation, we could see that and begin to anticipate that whichever move, whether it was to the downside, because we don't know, or to the upside, was going to be powerful, right? So this large support level that was created here at 30,000, do you think it is a coincidence that Bitcoin came back and tested it in the future? Heck no. This is the biggest support area that it had since it left the station at like $3,000. So as we worked our way through here, it came right back down to that level, right? These are things that we can anticipate happening but it has to get through certain areas first, right? It's got to break through previous support. But we can look at it. We can go, okay, well, where's the first test? Here's one. Here's one. Here's the next one. You know, this area here comes through here. It's tested several times. And then again here. And this ended up being the low for that move, right? So we cut through this 45,000 area. Retesting the 30,000 was almost a guarantee. For me, this was a strong conviction buy area because it was at a 50% pullback and this strong support level right here, right? So again, context. Two important things that can help us make decisions confidently, right? Not that we were in there forever if things didn't work out, but we go, hey, at a minimum, this has a chance of getting a really, really good bounce. And it became the future support level. And actually, speaking now, we're in what? We're in June of 2022, and we are back at this $30,000 area. Again, this just doubled up the amount of support that that the market has here. That's all that did. Because there were a lot of people that bought this level, right? All right, and after this, Bitcoin eventually goes on to make new highs. All right, so I use the term accept or reject a lot. These price levels are like magnets pushing and pulling an asset in either direction. When price bounces or moves away from an area, I call this rejection. This can be desirable or undesirable, but yet again communicates important information. If we're looking for higher prices, then we want price exploration to the downside to be rejected. We want it to be rejected higher at key levels, right? Just like we talked about the $30,000 Bitcoin level. That price was rejected as price came down from $65,000 to $30,000. It was rejected higher from there. If price moves through an area or level and is not pushed back through it, then I refer to this as price being accepted. Again, if we are seeking higher prices, we want to break through areas of resistance above and for price to be accepted at higher and higher levels. So let's go back to that slide real quick and we'll look at it, right? So here, okay, this is the first major support area. As price comes down, tested it. It worked its way through it, but ultimately price was rejected higher, right? So at this point, the sell-off is over. This is now trying to reassert the uptrend at that point. So we can see that ultimately it failed, but price was rejected lower to the upside, right? So here, there wasn't much work that it had to do before it broke down, and so this was accepted, right? Broke down through here, no contest, made a little bounce for one day, broke through it. These new prices were now accepted. There was no rejection at that point. And then here, again, every time it hit the $30,000 area, price was rejected to the upside. 30,000 rejected, 30,000 rejected. So that is a good example of that.